What's good, everybody? It's your boy 8X. Today we're going to be taking a deep dive into two of the most powerful candlestick patterns, the bullish and the bearish kicker pattern. These patterns are highly reliable indicators of strong momentum shifts, and understanding them can help you anticipate explosive moves in the market. Stick around and I'll not only explain what these patterns are, but the logic behind them and why they're so powerful. So let's take a look at the bullish and bearish kicker pattern. So let's start with the basics. A kicker pattern is a two-candle formation that signals a shift in market sentiment. A bullish kicker occurs when the market transitions sharply from a bearish to a bullish sentiment. And a bearish kicker occurs when the market transitions sharply from a bullish to a bearish sentiment. Now, what makes these patterns unique is that the second candle opens at the opposite end of the first candle with little to no overlap, creating what's known as a gap in market psychology. Let's look at some chart examples so we can break this down a little bit further. Let's take a look at QQQ. So here we have QQQ on the daily, and you can see that this candle is seeing significant selling pressure. Not only did we gap down, but we also closed pretty bearish on the day. We do have a slight wick to the downside, but it's a bearish candle. You can see that the next candle gaps up above the close of the candle, and not only that, it closes above the high of the previous candle. So what this means is that the individuals who went short the day prior or holding short positions, the next day they are automatically down on their positions, and they have to potentially cover their shorts. When they cover, it adds to the buying pressure, and you can see price continue to go up. Just like with other actionable signals, you are waiting for that confirmation, the next candle to trigger to up or the high of the previous candle to actually go long. I'll say that again. Once you see a bullish kicker pattern, you don't enter on the candle that's creating the bullish kicker. You wait for confirmation on the second candle to go long. Some folks may want to go in on the candle that's creating the kicker. Totally up to you. If it's created by an ER or by some news, totally fine. But waiting for that second candle to go to up or break the high of the candle will give you that further confirmation for that bullish kicker pattern. Now, what's the key takeaway in this? A bullish kicker pattern tells us that sentiment has shifted abruptly, and buyers are stepping in forcefully to reverse the trend. Think of the market as a tug of war between buyers and sellers. When a bullish kicker pattern forms, it catches the sellers off guard, and now they're rushing to liquidate their positions for a loss, which increases that buying pressure. Now, let's take another example, and here we have SPY, where we have a bearish kicker pattern to the downside. You can see that these individuals who went long the day automatically are down on their positions the following day with this gap down. They now have to sell their positions at a loss, and that leads to the increased selling pressure for the stock. Us as traders, we wait for the next candle to break the low of the bearish kicker pattern to go short the stock or to get puts. What's the logic behind the bearish kicker pattern? The bearish kicker pattern occurs when sellers enter the market with such intensity that it overwhelms the buyers, causing them to get out of their positions, which increases selling pressure. The gap down in the second candle represents a sudden shift in sentiment, leaving little room for doubt about who's in control. Now, why are kicker patterns so powerful? Kicker patterns are so powerful because they signal a drastic and sudden change in sentiment. They don't just hint at a possible reversal, they shout it. And this is why kicker patterns often lead to such strong follow-through moves. Here in WPM, we see a bearish inside bar. The next day, price gaps up above the high of the candle and continues to the upside. This sudden shift in trend forces these individuals to get out of the play, and is one of the reasons why you can see such a follow through that we see in WPM. Now, just like with a lot of other technical signals, this can be seen and used on any time frame. So all you have to do is identify the time frame that you see the bullish or the bearish kicker pattern, wait for the following candle to confirm the entry by breaking the high of the bullish kicker or the low of the bearish kicker, and then take your entry. Now, it's important to note that not all kicker patterns look the same. Here's an example with HD, where we got the bullish kicker pattern to the upside, but this candle barely created that gap from the previous close. But price did close above the high of the previous candle, which potentially forces these individuals out. And all you're waiting for is the next candle to see that follow through or break the high for the bullish kicker pattern to go in force. And the last thing I'll say is that the kicker pattern is so beautiful when you can use it in combination of other technical indicators or strategies. So if you see a bullish kicker pattern in conjunction with a 1-3 setup, a 3-1-2 setup, actually, I think SPY, here's an example right here, where we see that we get the gap up on the day, but price doesn't close above the high of the previous candle. this can still be considered or interpreted as a bullish kicker pattern. You would still be looking for that follow through, that 2 up to break the high of the green bar, and then you see that 132 expando to the upside. So when you use the bullish and bearish kicker pattern in conjunction with other strategies or other technical indicators, you can see a lot more success. Try these out, chart these out, and let me know what you think. And if you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more trading insights. As always, you all have a good one and happy trading.